This is the February 16th update of FX Market Response. 2 weeks ago, news broke that the U.S. had blacklisted cryptocurrency exchanges, part of the Iran sanctions. This led to selling of the U.S. dollar and other Western currencies, and buying of real currency, sending the foreign exchange market into a state of shock. Last week, this rebound appears to be coming to an end. Starting with this update, we will be posting a summary of the Currency Pressure Index. First, let me explain this sheet. It ranks the currency pressure of 50 currencies, including gold and Bitcoin. To view it, selling is on the left and buying is on the right. Therefore, the leftmost currency on the top row is the currency with the greatest selling pressure, and the rightmost currency on the bottom row is the currency with the greatest buying pressure. Currencies within this ranking are arranged in that order. Black text indicates currencies that were sold in the previous week, and red text indicates currencies that were bought down. From next time, weekly continuing figures will be added. This summary is extremely important, as it shows the weekly pressure fluctuations of the 50 currencies. Now let's take a look at the summary. First, we can see that the Argentine peso, ARS, located on the far left of the top row, is the currency with the greatest selling pressure. Next, we can see that Bitcoin, located on the far right of the bottom row, is the currency with the greatest buying pressure. All currencies are ranked by whether they are selling to the left or buying to the right. The Iranian rial, IRR, has sold right up to the Argentine peso. 2 weeks ago, it was next to gold, XAU, on the bottom row. Gold and Bitcoin were selling up, as shown in black. What we can see here is that 2 weeks ago, the Iranian rial saw a tremendous buying down, leading to a selling up of gold and Bitcoin. And last week, the opposite was true. The Iranian rial saw a tremendous selling up, while gold and Bitcoin saw a ferocious buying down. In other words, we can say that this is a ferocious rally. However, among these, the Swiss franc, CHF, remains in its position and text color. It's simply strong. To read this sheet, first compare the major currencies' text color and position relative to the US dollar, USD. If the dollar and other major currencies are in different text colors, it is inversely correlated, while the same color indicates a positive correlation. First, check this core correlation. Next, all minor currencies that are the same color as the dollar are positively correlated, while different colors indicate an inverse correlation. This is called grand correlation. This is the direct or inverse of core correlation, and grand correlation is also direct or inverse. This is called the correlation characteristic of pressure equilibrium in the market. This level of understanding of this characteristic is sufficient for now. From now on, every week, use this characteristic to organize the pressure table of major currencies and determine its consistency with actual rates. You will gradually be amazed. Eventually, you will be able to measure fundamentals. The dollar, as the base currency, has absolute influence on foreign exchange market trends. It is no exaggeration to say that the pressure table alone represents the foreign exchange market. As usual, the top left of the charts shows the dollar's currency pressure index. That column is a differential pressure chart showing pressure trends between the Lindex and current market rates of major currencies. Here, the trend in the current market rate is broken down into trends in 2 Lindex values. The charts outside that column are of minor currencies, but these charts simply break down the current market rate into 2 pressure values. There is something we should confirm here. All currency pressure index values are the buying or selling pressure specific to that currency and do not change between pairs. They also do not change for the opposing pair. This is called pressure equilibrium or pressure balancing. Today, I would like to focus on chart number 34, which compares the Iranian rial and the dollar. As mentioned in the summary earlier, the dollar has recorded similar selling and purchasing trends. However, the dollar's Lindex in chart number 1 is selling up. It's in black text in the summary. For both major and minor currencies, you can also look for dollar selling and domestic currency buying on the differential pressure chart. The thing to look at is the chart of selling at each market rate. The weekly rate of change should be a positive value in black text. So far, we've covered the basics. From next time, we'll make it more visible through statistics. At the same time, we'll also be able to determine the consistency of buying and selling between the Lindex pair value, which is the differential pressure between the 2 currencies, and the market rate value. This consistency will prove the, quote, correlation properties of pressure equilibrium in the market. This is the end of this article. Next, I will show you the pressure tables for other major currencies. This is the basic version, and the difficulty will increase little by little from now on. We will now play pressure tables for the euro, EUR, pound, GBP, Chinese yuan, CNY, and Japanese yen, JPY, without sound. Let's use this time to review what we learned today. 1. I explained the summary ranking of the currency pressure index. Selling is on the left. Buying is on the right. Weekly selling is in black. Buying is in red. The reciprocity of when one goes up and the other goes down represents positive and negative correlation. 2. There is something called the correlation characteristic of pressure equilibrium in the market. This influences the selling and buying of prevailing rates. We will now verify this weekly using the major pressure table. That's enough for now. Thank you for watching. See you next week. I hope you have a good week. Taro Tanabe, reporting from Japan.